Welcome back to the Chiro Money Show, where we're helping chiropractors make better financial decisions so they can build stability in their finances and a lifestyle that they love. We're your hosts, Chris Shield and Scott Campbell of Align Wealth. Welcome back.
Got a new nickname this week for us, Chris.
Yeah, love it. Let's hear
We
it.
have a collection growing of nicknames for the two of us.
Yeah.
The latest is the Money Boys.
The Money Boys.
With a Z, of course.
Yeah. You know what? I was actually thinking we almost had one. It didn't stick though, but remember we were called the Finance Bros?
Finance Bros. Yes, I forgot about that one.
We kind of kiboshed that one because we're not Finance Bros.
Not your prototypical what we would think of a finance bro.
No,
sure.
No.
And we're not really bros.
No.
Although we do high rocks. That kind of makes us bros a little bit. Yikes.
Yikes, we better be careful.
Yeah, we've grown a collection. What else do we got for Nate?
Yeah, then one of the recent ones, crowd favorite, I'm sure, is the two hot girls.
What's the context there?
The context. Client.
We need the backstory.
Yeah, exactly. How do we say this? So client has an existing advisor and he's like, that's like my wife, been with them for a long term, but now I got these two hot girls on the side here that are doing all this work for me. And it's kind of been hiding it from the wife a little bit.
Avoiding an awkward conversation.
Yeah.
Ending divorce.
Yeah. Divorce has been engaged.
Has been engaged. Yeah. And we got the dream team.
The dream team.
Another
classic.
The dream team. Yeah.
Pretty good.
So we need to hear from you guys, the audience. What's the nickname that needs to stick here?
Yeah. Do we have a vote? Yeah.
Well,
let us know your thoughts.
In other news, the Money Boys are running it back on the High Rocks front.
Yep, it's official. Signed up as a team again.
Yeah.
In Ottawa in May. So they opened up additional dates. We were already booked for our individual races, but just too good to pass up. Had to have another chance at the doubles. Eh?
That's right. For our new listeners, we hit at the High Rocks in Toronto when we were out at the AFC conference in October last year. Chris and I took a podium, #1 spot. That was pretty exciting. So got to go for it again. Try to shave down some time.
Yeah, see if we can repeat the win, but go even faster.
I'll keep working on those wall balls. I'll keep working on them.
If our listeners don't know what High Rocks is, then just probably keep it that way. Don't get involved.
Then they're going to think that we're bros.
Yeah, exactly.
We don't want that.
Just
at least we be finance bros.
Yeah.
All right.
We'll see. Anyway, what are we talking about today, Scott?
Talking about critical illness insurance today.
Oh, my favorite topic. Exciting.
Favorite topic.
Yeah.
Critical illness insurance. And basically the question is like, is it actually critical to have in place? Should this be part of your financial plan?
Yep. Yeah. I'm curious to hear your thoughts because I think we might differ on this one. And full disclosure, I currently don't have critical illness coverage in place. Never have. I've always kind of written it off as like, whatever. That's kind of the lowest priority. But curious to hear your thoughts on that.
Yeah, on the flip side, we have different takes on this. And we've heard from a recent listener that we need to have more banter and disagreement on certain topics.
Yeah.
Chris and I agree on a lot of things, but maybe not everything.
Yeah,
on the other hand, I've had critical illness insurance in place for both my wife and I since I was like 25 years old and wouldn't have it any other way. Another topic, a topic for another day is insurance on children. I even have critical illness on both of our kids.
Yeah.
For other reasons, but we'll get into those reasons a little bit on why we have coverage and why it's part of our financial plan today.
Yeah.
For sure.
Yeah. Cool. But thanks for bringing that up. We did have some feedback. We got to have, we can't just agree on everything. Hey, Scott?
That's apparently not good, fun podcast.
Apparently that's boring. So shout out, Matt. Thanks for the feedback.
Thanks, Matt.
Yeah. Hopefully this one's better.
Yeah.
Yeah. All right. So here's my take, Scott. Like critical illness is there. It's from what I understand of it, you get paid out a lump sum if and when you are diagnosed with a qualifying illness under the list of conditions in your contract. Okay.
Yep.
So most of the time, I mean, it's hard to say, right? Like you could get diagnosed with something and it doesn't really impact your life. And on the flip side, you could get diagnosed with something and need a lot of treatment and medical attention that disrupts your life completely.
Yep.
My take has been like if you have an emergency fund, if you have enough flexibility and like continued income coming in throughout that, what do you need the critical illness for?
Yeah, a few things that would come to mind right away. So let's back up before we get into that. Let's just step back and break down what a critical illness policy is. So it's a contract that you have with an insurance carrier. It's different from a disability insurance policy, and where you get paid out a monthly benefit if you get hurt or sick and can't work and do your job. You get paid a benefit amount on a monthly basis. Where a critical illness policy, you're applying to be insured for a lump sum. $50,000, $100,000 policy, maybe even upwards of $250,000 or more for coverage to say, if I get diagnosed with one of the covered conditions, usually that's, I think it's around 22 to 30 listed conditions, depending on the carrier. Obviously, the big ones being cancer, heart attack, stroke, they probably make up at least 80% of claims being made. That if diagnosed and it meets the condition, you get the lump sum deposited into your bank account, say it's $100,000, and you can do whatever you want with that money.
No restrictions. Like it's not like it has to be used for treatment or whatever. It's just here's the cash. Do with it whatever you want.
Exactly. Yep.
Can I ask, what are some of the things you've heard of people doing with that?
I think that's the beautiful thing with this type of insurance, at least from my perspective, is that I guess I'll share from my own standpoint. If I were to get critically ill, like if I got hit with cancer tomorrow, a few things would happen. Yeah, I have a well-established emergency fund. I could tap into that, but I don't have $100,000 emergency fund. So that would be one thing. Second, I probably wouldn't be working for a period of time, so there might not be necessarily income coming in.
That would suck for me.
That would suck for you. You'd be doing a lot more work for sure. So maybe you should be encouraging me to have this, or vice versa. You need to be insured. If you get sick, I need to hire someone just as good as you or better.
Man, right? That shouldn't be too hard.
Here, I'll break like the way I think about this is that in a worst case scenario, I want to have flexibility and options so I can completely eliminate any potential financial stress or major setback in terms of my long-term goals. I don't want to have to take out a HELOC. I don't want to have to remortgage my house for a large amount of money. I don't want to, wipe out my tax-free savings account to go pay for medical bills. I work hard to build my wealth. I feel strongly about shifting that risk to an insurance carrier for what I think is a very nominal cost to say, hey, if I get sick and it's to that degree, I want to have options. I want my wife to be able to be with me and support me, whether it's treatment here locally in Edmonton where I live, or I need to travel elsewhere in Canada or go to the US, or heck, go to Germany because I need to see some specialist there to get treatment. I want to be like, I got the cash. I'm going. I'm taking care of business. I don't want to worry about finances at that point in time. Hopefully, I do consider myself as someone in good health, but shit happens. Usually in those cases, it's those people that can survive a critical illness, right? They get knocked down, but they're the ones who are going to get through treatment. It might take them out for a short period of time, but they're going to get back on their feet and get back to living life. I don't want a financial setback.
Yeah, that's fair.
That's my broad take on it.
Yeah. I mean, yeah, I don't want to pull from my retirement assets to live on if I can't work for a few months because I'm getting treatment or have to travel somewhere or whatever. I guess I kind of buy that.
Yep.
Yeah.
I guess one thing I'll share too, in terms of the reason why I brought the topic up to have a discussion on this today around critical illness insurance, is I saw a recent post on Instagram, and I see these all the time. Someone posting a GoFundMe request to say, here's a story. Someone got diagnosed with cancer or whatever the case is. Community rallies around asking for donations. And don't get me wrong, those stories, they tug at my heartstrings. And I'm not saying GoFundMe is bad. I'm usually one to say, yeah, I'm happy to pitch in and make a donation as well and support that person in a time of need. I'm not discrediting any of that. But I can't help but think of like, oh man, like how much better would it be for that individual and maybe their family members to say, oh, this person had a critical illness insurance policy in place. It was costing them $400, $500, $600 a year. And now they got $100K in the bank, and they don't necessarily need now to go to the community and ask for financial support in a time of need. So when I see those, I'm like, I feel like that could have been avoided potentially
For sure.
with shifting that risk.
Exactly. There is a solution that the world has come up with to do exactly that, to shift that risk from the individual to a company,
Yep.
an insurance company.
Yep.
And it's like you say, in a lot of cases, it's a fairly nominal cost. I mean, on the flip side, say you have a critical illness policy for 20 years, that's 500 to $800 a year, something like that. Like it's $5,000 to $8,000 for a 10-year period of time, 10,000 to 16,000 if we have that in place for 20 years. Like, yeah, I guess what's the likelihood of actually being diagnosed with a critical illness? Is there strong probability for most people to warrant that like transfer of risk and that cost?
I think so. I don't use stats I don't share these stats for the sake of like putting fear in someone, but the stats are what they are. And that is 2 in 5 Canadians will be diagnosed with cancer in their lifetime.
That's just cancer.
45% of people. That's just cancer, right? I saw a stat here that says about 250,000 new cancer cases projected in Canada in 2024. Like, I'm assuming a lot of these people are healthy individuals. I often hear the rebuttal like, oh, I'm young, I'm healthy, I take care of myself. I don't know about you, Chris, but I've heard plenty of stories where people, it's like, what? That person, she got cancer? She was 40 years old. She was a marathon runner. She ate well. Like, you would least expect it, right?
Yeah, for sure. Like they still happen. Obviously, the
Still happens.
probability is probably a little
Lower.
less lower than someone that has, whatever kind of ailments or, stuff that our healthcare system would say is not the best.
Right.
But
But the cost of that insurance is a good reflection of what the
right.
probability is, right?
So if I'm young, healthy, active, is my insurance cheap? Or like what if I have like a family history of illness? Like is it more expensive then for me, or how does that work?
It depends, right? But generally
Favorite
speaking,
answer.
yeah, that's our favorite answer. Generally speaking, yeah, if you are young and healthy, that's the time to get the coverage in place. If you have family history, could that impact insurance underwriting? Could you get an exclusion from your policy potentially? Could you pay a potentially higher premium? Both the answers are yes, that's a possibility, but more reason to potentially get coverage in place when you are young and healthy and can get through underwriting. As you get older, as you have more ailments, maybe other family history, things like that, it can get maybe to a point where you can apply it and successfully be approved for a policy, or it becomes so expensive where it's like, I'm not going to pay $400 a month for a critical illness policy.
Interesting. So would you say critical illness, if we had to rank the different three main insurance types, like I know this probably don't want to say like definitively on this, but if we're looking at just life insurance, disability insurance, critical illness insurance, how would you rank those personally, and what would you kind of start with?
I don't know if I could rank them necessarily. I guess to answer the question though, for most of our listeners, as a chiropractor, disability, we've talked about this on previous episodes, that's such an important piece of your financial plan. If you can't work and bring in an income for a period of time, like you are your biggest asset. We won't get into that again, but disability is like, if you don't have that, you should have got that yesterday. In our opinion, life insurance, that can vary depending on your circumstances. If you're individual, no spouse, no kids, maybe you don't need life insurance right now. But opposite, no debt, right?
On the flip side, you got a mortgage and you got people that depend on you. You probably need that yesterday as well.
For sure.
So is it fair to say that critical illness kind of doesn't take a backseat, but maybe is not at the top of the priority level for people that are considering, like maybe someone doesn't, one of our listeners doesn't have any coverage in place, like probably say address disability and life insurance first and then critical illness next?
I would agree. I think the important thing that I would say here is that, yeah, let's get the pieces that are what we would say are critical to a good financial plan, especially if you are, have a spouse, dependents, life insurance, disability insurance. Those are such important pieces to the overall plan to protect your financial future, in our opinion. From a criticalness standpoint, my perspective is that we as planners at least need to shine a light on that potential risk for a client and say, let's have a discussion about this. Maybe that's not a policy that you want to have in place, but let's talk about what your concerns are. Do you feel like this is a risk? If something were to happen, what would you want to see happen at that time? Maybe if you're someone like for you, like you tell us, Chris, you don't have a policy in place. You've probably thought about this.
Yeah.
What do you want to see happen if worst case scenario, you get hit with a diagnosis, knock on wood.
Yeah.
What do you want to see happen?
Yeah. Like you, I want flexibility and options. And yeah, ultimately, yeah, that's what it comes down to. It's like, can we get healthy? How do we get healthy? What's the best option? Is it going somewhere for a specific treatment, or, is there out of pocket costs for that healthcare component, or does it equal an extended kind of time with family where you can kind of reflect on the big picture of life and just try to make some memories and have some important family time and take a bit of a slowdown.
Yep. Here's something that you might not know, Chris. Did you know that critical illness insurance was actually essentially kind of developed, or the idea was inspired by a doctor?
Really?
And not a financial insurance company saying, oh, I have a product that we can start selling and make a profit of. Wow. It was actually a doctor, I think in and around the 70s. At that time, essentially this doctor was saying, you know what? Back 20 years ago, maybe in the 50s, if you had a heart attack, the chances of you dying from said heart attack were pretty high. But as medicine has advanced further and further, in these days, heart attack may not, not good to get a heart attack, of course, but people are surviving them at a much higher rate than they were in the 30s, 40s, 50s, than they are today. And that doctor said, well, there's also, they're surviving this heart attack or whatever the illness is at a higher rate than they were. But it's also coming with a whole lot of added financial stress because they don't maybe have the funds to pay for the treatment and the extra costs of, maybe they need to fit their home with like a wheelchair ramp, or they need to fly to the Mayo Clinic in the States to get the best treatment, or they just need to spend, 3 or 4 weeks in Vancouver, and that costs hotels and parking and, family coming in from out of town to support. That's what that doctor was recognizing, to say, this is coming with some financial stress. How can we solve that problem?
Do you know if this was a doctor in the States where healthcare is a burden? Cost?
It is.
Financial cost?
I think so. I don't quote me on that, but I believe it was a doc in the States.
Yeah. Not that it can't be in Canada as well, right? Like there can be additional costs beyond, the traditional medical system.
Yep.
But yeah, interesting. Okay. So let me ask some clarifying questions around coverage and stuff like that. What if I have a disability policy and a critical illness policy? How could that work if I'm diagnosed with something that takes me out of work for a few months?
There is a world where you could potentially claim on both of those policies. Just because you can make a disability claim does not necessarily mean that you can make a critical illness claim, and vice versa. Depends, right? There are situations where you might be diagnosed with a critical illness, but are still able to work, but it's going to come with a financial toll and still the expenses, but you're not completely disabled with the inability to go be a chiropractor. But there certainly is a world where you might be able to claim on both those policies. And from my standpoint, your disability policy is intended to replace your monthly income and protect that, because we're still going to have your typical things that you need to cover, your bills, your mortgage, loan payments, et cetera, to support you and your family. But you add in the layer of like, I'm away from work and I also got hit with whatever illness, I need to go get some treatment for that. Again, from my perspective, I want to have flexibility and options, and I'm willing to trade $400, $500, $600 a year to say, hey, if I get hit with something major, I want $100K in my bank account so I can go figure some things out.
That's fair. What about early stage diagnosis? Is something that like you know, we've caught it early. Maybe it's not like, is there things in the contracts with these policies where maybe they don't pay out, or, we should be concerned about like the wording on these?
Yep. Obviously, do your due diligence with whomever advisor you're getting a policy in place. Like a lot of them are very similar in nature in terms of how they're put together, but you want to understand those terms. Most of the major carriers will have like an early diagnosis type of benefit. Like say it's an early stage of breast cancer, for example, it's stage 1, it's caught early. In some cases, those policies might pay out 10 or 15 or 25% of the benefit amount. And in which case you receive that cash as well, do what you need to do with it. Obviously, the best outcome is that, you recover and it doesn't progress from there. But if it were to progress into a later stage of cancer, which is now deemed to be a lot more critical, then the rest of the benefit would then be released to get your full insurance benefit that you're insured for.
And what about, like, I know with other policies, life, disability, other things like that, there's an option for ownership. Like it could be owned by an individual or it could be owned by the corporation. Where does critical illness fall into that? And is there a rule of thumb on that or not?
No rule of thumb. That's a good discussion to have with your financial professional. Like how do you want to see that structured? If you own it personally and pay for a policy with after-tax dollars, you're going to receive your benefit amount that you're insured for tax-free. No taxes being paid on the $100,000 that you might receive, for example. But you could also, if you're incorporated, you could say, hey, I want to have a policy that my corporation pays for. It's a deductible expense to my corporation. And if I were to get sick, maybe it's for a different purpose. Hey, if you're the primary doc in your practice and you get hit with something, maybe you feel good to say, hey, I would like to see, $100,000 or a couple $100,000 land in the corporate bank account. I need to step away from the practice and deal with whatever I have to deal with right now. I need some cash from the corp to make sure that I can, the practice can keep flowing. Expenses are covered. I can bring in some support, whatever you need to see happen. Maybe keep paying yourself a salary as well. Like that's why you maybe want to consider a corporate policy. But again, it depends. It's a personal situation depending on what your needs are.
Yeah. So ultimately, if it's owned by the corporation, that benefit amount is going to the corporation. It could be paid out to you personally, but there would be taxation.
Exactly. Yep.
Or it could be there to support the corp and
exactly.
the business. Yep. Yeah. Cool.
I'll share a quick story. It's one it's personal to me and my mom. She got diagnosed with an early stage of breast cancer when she was in her early to mid 50s or so. Fortunately for her, she caught it very early. It was at a stage where she did receive the full benefit amount. I believe it was $75,000 that she received in cash. So before that, in my mind, if you were diagnosed with an illness and you got your benefit, you typically need that cash for some of the things that we talked about. You want to go get the best treatment possible. You need to make your home wheelchair accessible. You need to have your family take some time off work and stop earning an income, et cetera, et cetera. What's interesting about my mom's story, which she said, you need to share this, is that you're not restricted of how you spend that money. For my mom, she didn't want to get chemotherapy. She didn't want to go down that path. She wanted to take a more natural approach to recovering from cancer. At that point, she wasn't fully retired. And she said, I need to use this money to focus on my health. She truly believes that her cancer diagnosis came from being overstressed. So she's like, I need to get out of Edmonton. I hate the cold. I need to get to the West Coast. I need my feet to be in the ocean. I need to eat good organic food and like nurture my body with good natural forms of therapy. I need to de-stress. I need to focus on my health. I need to take a step away from my business. And she spent every single dollar in that fashion and she has zero regrets. And she didn't have to tap into her retirement fund to go through that. And she wouldn't have had that option to do that without that policy in place.
Right. Yeah.
So just another perspective. Just another perspective. Yep.
For sure.
Yep.
For sure. Yep. Definitely. You've given me something to think about, Scott.
That's what we're here to do, Chris.
That's right. It's all about me.
There's one thing that it doesn't cover though, which is like, I feel like we need this type of coverage for those of us who partake in high intensity activities. Like at the end of a high rocks race, I'm in a critical condition. Very critical. I'm lying on the floor horizontal. There's something, if you're at 190 beats per minute for an hour, like in some cases, there should be an insurance benefit maybe paid out.
We need some, well, yeah, most of our stuff is more endurance in nature, but some kind of sport specific coverage that, yeah.
But the thing with long endurance races, if you run like a long trail race, like you're never in a point of critical
I don't know, man.
condition. I haven't experienced that.
Okay.
I would take running slowly for 12 hours over running 190 beats per minute. That
Yeah,
high
that's
intensity
fair.
at high rocks.
That's fair. Yeah. I don't know, man. I can suffer for an hour through high rocks. Doing 5 hours on the trail is different.
Fair enough. Fair
It
enough.
takes a lot more mental capacity for me to do that for some reason. But anyway, great conversation. Thanks for
Yep.
sharing your insights on critical illness, Scott. Hopefully our listeners got some good nuggets out of that. And yeah,
Cool.
leave it there.
All right. Thanks for the conversation.
Yep. Take
See you
care.
again next week.
All opinions expressed on the Cairo Money Show are for educational, informational, and entertainment purposes only. Nothing on this podcast should be considered financial, legal, accounting, or tax advice. Always consult your own team of licensed professionals before making decisions about your finances.